Hello everyone, I am Ed Park, Managing Director at ATMS Logistics. Today, we are going to discuss an important topic that U.S. importers, foreign exporters, customs brokers, and freight forwarders need to understand. On June 3rd, 2026, President Donald Trump signed an executive order titled Strengthen the Customs Enforcement. This executive order does not simply mean that the U.S. government wants to collect more tariff. Rather, it establishes a direction toward a strengthened requirements and enforcement related to importer eligibility and accountability, import declaration information, customs duty evasion, country of origin violation, tariff classification errors, undervaluation, illegal transshipment, and forced labor product. So, how could U.S. import operations change going forward? Today, we will discuss 7 key changes. The first area is increased oversight of the importer of record, or IOR. When goods are imported into U.S., one of the most important parties involved is the importer or importer of record. The importer of record is responsible not only for accuracy of the import entry, but also for the payments of duties and taxes and compliance with applicable U.S. trade laws and regulations. This executive order established a direction toward applying stricter eligibility requirement to importers of record. For example, the government may pursue measures such as requiring importers to maintain a certain level of physical asset in the U.S., increasing minimum customs bond coverage requirement, and continuously monitoring the eligibility and status of importers of record. The executive order also includes a direction toward ensuring that all importers of records maintain a certain level of good standing, meaning that they remain in good standing with U.S. Customs. Therefore, going forward, simply establishing a company in the U.S. may not be enough to operate freely as an importer. It may become increasingly important to demonstrate that the importer is an actual operating business that complies with customs laws and has a financial ability and accountability to fulfill its customs obligations. The second area is increased oversight of foreign-based importers of record. The executive order established a direction toward applying stricter formal entry requirements to foreign importers and managing informal entries with a greater focus on U.S.-based importers of record. This could be an important change, particularly for companies that sell product directly from overseas to U.S. For example, if a manufacturer or seller based in Korea imports product directly to U.S. without a substantial U.S. import structure, it may become increasingly important to review. Who is the importer of record? Does the importer have sufficient assets in the U.S.? Is the customs bonds sufficient? And does the importer have the actual ability to fulfill its customs responsibilities? Therefore, foreign companies should proactively review whether they need to establish an import structure through a U.S. entities, how they will designate their importer of records, and how they will maintain their customs bond. The third area is stronger vetting of all parties involved in the import process. The executive order directs the development of enhanced vetting procedure not only for importers of record, but also for individuals and companies directly involved in the import process, including customs broker, freight forwarders, and bonded merchandise custodian. Importantly, this includes not only one-time verification, but also recurrent and ongoing vetting. This means that CBP may increasingly look beyond the import entry itself and more systematically examine who is the importer, customs broker, and logistics provider actually are, what types of transactions they conduct, and whether they have properly complied with trade laws and regulations in the past. The fourth area is stronger import disclosure and certification requirement. In the future, importers may be required to provide more information to CBP. For example, this could include foreign tax identification numbers, manufacturer's product identifier, the product models or style number, key product specification, including composition, grade, and size, information regarding the product's supply chain and production method. The direction may also include requiring companies to certify compliance with certain trade and supply chain related laws and regulations. One particularly important aspect is a potential requirement for foreign exporters to provide CBP with documents or information that they previously submitted to their own country's customs authority before exporting goods to US. This would make it easier to compare US import declarations with a customs declaration submitted in the exporting country. As a result, it will become increasingly important to ensure consistency among commercial invoice value, packing list, product description, country of origin, HTS classification, export customs declaration information. The fifth area is one that I consider particularly important. It is stronger enforcement related to customs duty evasion. The executive order established a direction toward strengthening enforcement against several types of violation. The first is undervaluation, which involves declaring imported goods at the value lower than the actual transaction value. The second is misclassification, which involves incorrectly classifying a product under a lower duty HTS code without properly considering the product's actual characteristic. The third is illegal transshipment, which involves routing goods through a third country or otherwise concealing the true country of origin in order to avoid applicable tariff. The direction also includes stronger enforcement against a product associated with forced labor. Therefore, U.S. importers should not assume that simply because the shipment has cleared customs, the matter is finished. Even after clearance, importers should remain sufficient documentation to support why was this value declared, why was this HTS code used, why is this country considered the country of origin. Importers should prepare to provide evidence supporting their declaration in the event of a future CBP audit or post-entry review. The sixth area is stronger penalties and enforcement. The executive order established a direction toward strengthening enforcement of liquidated damage associated with a customs bond and expanding audits related to customs law violation. It also calls for stronger actions against companies that repeatedly violate customs requirements. In addition, the executive order includes changes to penalty mitigation standard and in certain circumstances establish a penalty floor of at least 50% of assessed penalty. It also established a direction toward eliminating mitigation for repeat offender. Therefore, the approach of saying we'll file it incorrectly now and fix it later could become increasingly risky. Companies that experience recurring customs error should regularly conduct internal customs compliance audit, HTS classifications review, customs valuation review, country of origin review, and related party transactions review. These reviews will become increasingly important for maintaining customs compliance. The seventh area is stronger enforcement against non-compliant import. The executive order established a direction toward expediting the seizures and disposal of imported goods that violate customs requirements. It also includes provision for increasing bond requirements for high-risk cargo and, when necessary, utilizing third parties for disposal of such goods. Therefore, importers need to take the cost and risk associated with the CBP hold and seizures more seriously. Potential costs can include storage costs, demurrage, detention, and inspection costs. In worst case scenario, the importer could ultimately lose the cargo itself. So what will change going forward? The key message of this executive order can be summarized in one sentence. U.S. Customs will take a closer look at importers' identity and accountability, import declaration information, supply chain information, duty payments, and compliance with U.S. trade laws and regulations. Going forward, U.S. import operation may no longer be limited to simply submitting documents and clearing customs. Instead, companies may need to manage the following area as an integrated customs compliance program: customs bond, accurate HTS classification, accurate customs valuation, country of origin management, supply chain transparency, and import documentations. So what should importers do now? I recommend focusing on the following 5 areas. First, review your importer of record structure. Clearly identify who the actual importer of record is. Second, review your customs bond. Review whether your current bond coverage is sufficient. Third, review your HTS classification and customs valuation. Reevaluate your tariff classifications and customs value, especially for products that have been imported using the same classification for many years. Fourth, review your country of origin and supply chain. If your products involve manufacturing or transshipment through third countries, carefully review the country of origin and the overall transaction structure. Fifth, conduct a customs compliance audit. The best approach is to identify and correct problems internally before CBP discover them. The U.S. executive order on strengthening customs enforcement is not simply a change to customs procedure. It is an important signal that the U.S. import and customs systems may be moving forward. More information, stronger vetting, greater accountability, and stronger enforcement. Korean companies exporting product to U.S. as well as U.S. importers, Amazon sellers, distributors, and manufacturers should pay close attention to this development. However, it is important to understand that many aspects of this executive order direct the Department of Homeland Security and CBP to develop future regulations and procedures. Therefore, the actual implementation date and specific requirement should be confirmed through the future CBP regulations and guidance. The executive order itself also states that relevant action must be implemented consistent with existing laws and Administrative Procedure Act called APA. The U.S. import and customs environment could change significantly depending on the specific standard and procedure that CBP ultimately established. If you found this video helpful, please like, subscribe, and turn on notification. We'll continue to provide practical and useful information about U.S. customs, import clearance, international trade, global logistics, and supply chain management. If you have any questions, please contact us at the email address displayed on the screen. Thank you for watching, and I will see you again in the next video. Have a wonderful day.